The Bloomberg Galaxy Crypto Index dropped about 65% in the second quarter of 2022, which is the worst performing quarter since the index inception in 2017. There are 3 points that we can take out of this episode. The first one on what does this mean for the crypto asset class. The second one, what does this mean for the technology in the crypto asset class? And the third one, how do we think about this going forward? On the first point, the question is whether this big downturn has actually put in doubt the sustainability of the crypto ecosystem. Was this just a bubble that the Fed just burst? I would challenge that assumption. My argument is that what we saw was the unraveling of a stablecoin peg, the Terra Luna peg, which was a peg to the US dollar with an unsustainable yield of 20% and insufficient reserves, part of which were actually in Bitcoin. When the peg unraveled, that actually spread out to a big crypto ecosystem, triggering a lot of liquidity scrambles and big deleveraging. The second is on the technology. For the technology skeptics, I would say this was not a consequence of a technology failure. There were no hacks, no protocol bugs, nothing but a poorly designed financial architecture on this particular stablecoin. There was not a problem in the code itself, so the lesson here is to vet these protocols by the financial soundness. And third is on how to trade this from here. Given that a lot of these assets are likely oversold, a lot of the good quality assets are likely oversold, we have to keep in mind that unlike traditional markets that have a negative skew, which means we go up in an escalator and down in an elevator, big moves are to the downside. Crypto markets have exhibited positive skew. That means we actually do see we go up in an elevator, so big moves to the upside, which means that if you stay on the sidelines for too long waiting, you may actually miss the big move up. I'm Tania Reif, CIO of Senda Digital Assets.